everybody. My name is Allison Ostrander, and I am the Director of Risk Tolerance as well as an options specialist here at Simpler Trading. And in today's video, I want to talk about Apple. Now, I will note on the Apple for the daily chart, we have already started to see this move higher from the last true low that printed, right? So we had a true low signal here telling us there could be a good discount price, right? You might trade this up into resistance levels, and that move has already started to happen. As you can see here, we're at the ATR trailing stop. The reason, though, why I want to bring this up is because of the weekly chart. So let's pull up the weekly chart. The weekly chart also printed a true low not too long ago, back here in March. So let's zoom in, right? So here is that signal that printed, right, a couple weeks ago. And it was telling us that this is starting to be a discount price, right, for Apple for the bigger picture point of view. Now, I will say this about the weekly chart. I love that it's overall bullish, but there are still signs of consolidation, of course, with the Bollinger Bands kind of remaining flat, with momentum having reset towards the zero line with the consolidated signal here, but it has a great squeeze setting up. And oftentimes when you get a true low signal to print like this in an overall bullish trend, it's a good place to buy in. We actually had a similar signal in March of last year that set up with the true low indicator. Now this printed a few more weeks than this one did, right? But you can see we had the signal set up in March. We had a short-term move higher back up into the prior highs. And then if you gave yourself a night time, right, you had this nice run up into September as well as into the end of the year. So for a short-term move, you might play this back up towards 175, 180. And if you do want to take it as a short-term move, I would say, one, wait for this resistance level to break to confirm that we're trying to move higher above it, and then play this daily squeeze, right? Momentum will more than likely cross above the zero line. That will have bullish sentiment. And then play it up into that 175, that 180, 182 range, back up into these prior highs and those levels to the upside, right? Play that short term with verticals or with broken wing butterflies and try for that bounce higher. Otherwise, if you want to take advantage more of the weekly setup, which is what I would be looking to do myself, right? Buy myself plenty of time in this market. And you still might time this entry off the daily chart, right? Because if we get a pullback down towards that 150 range, 155 range, and hold that as support, that's obviously going to make a much better entry than where we're at now at 168. So if that daily resistance holds and we pull back into these levels here and they hold as support, that's going to give us a much better entry for this, right? So you do want to be mindful of the timing. But at the same time, if we start to break above that daily resistance level where we're at now, like I said, it's a good sign that we'll already start to pick up to the upside shorter term, certainly. And of course, with the squeezes that we have on the daily and weekly chart that are building up, we could potentially see those squeezes start to take off. So if you want to position this for your account now, I understand. And what I would look to do personally is probably go out towards the September monthly expiration. Now that's, giving this quite a bit of time. You're definitely holding it through an earnings announcement, but you're playing this off the weekly chart. So it really gives you time to play both for the short-term move, but of course the bigger picture trend in itself. Now, if you have the capital to go with an in-the-money delta, by all means go for it. Certainly, right, that 0.7 delta is usually a nice spot to go with. That would be the 155 strike at 22.27. But if you're like me and you trade a small account, that's a good chunk of it, right? So personally, I wouldn't mind going out of the money on this. Something like the 190 all the way potentially to the 200 level, right? If we get that immediate move higher to the upside, should allow for a quick profit either way. But if we play for the trend, right, the last time we kind of saw that trend move from March, which once again, right, is where it printed on the weekly chart, going into at least September, it was a roughly a 30 plus point move to the upside. So of course, the idea here, right, is if we get a 30 plus point move to the upside, we should be around 200 or higher. That should put that strike at or in the money and allow for a nice profit. So that way, if you go with something like the 190 or even 195 strike, the idea, of course, is the worst case scenario, if that symmetry is kind of the same, right, with the point move from this setup, and it takes us that long to get up there, then the 195 strike should be around at least 5 points in the money, right? So you should still be able to squeak out a profit overall, if not break even. So on trades like these, I don't mind going out of the money to play for this run higher, and certainly you could look to take advantage of it for that move. So I like how it's setting up, but like I said, watch the daily resistance, guys. It never feels good jumping in at a resistance level because you have a case of almost FOMO, and then you find that it ends up pulling back into support. So just watch how it trades around here. If we do start to break it, then great, you have the confirmation and you can still jump in for that short-term move or the bigger picture view. But if it holds resistance here, then look to see it pull back into a support level, right? See how those hold. If it goes down all the way to 150 and holds that, that's going to be, a great entry to at least play it up into resistance again, if not higher. So just be aware of this current resistance that we're at, but that is what I'd be looking at in particular on Apple, especially off that weekly time frame. Thank you guys so much for joining me in this. If you want more information about the True Low Indicator, I will be hosting a free webinar on it Wednesday, so please feel free to join me then. Thank you so much. Have a great rest of your trading day. As always, may the trade be with you, and I look forward to talking to you next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.